What's up, everyone? I'm gonna come at y'all today with a simple entrepreneur one. What can avoid? I don't know. Let's go avoid these 10 mistakes entrepreneurs make with money. It's pretty common mistakes. I made some of these mistakes, and I just want to come so that people know about these mistakes. Now, before you listen to my advice and before we continue on, please know that I'm not your business consultant and I'm not your financial advisor. Before you do anything, please talk to a financial advisor or a business consultant. And I'm not your business consultant. I'm just some guy on YouTube. Now, you are gonna make some of these mistakes. It's just inevitable, but try to avoid these 10 mistakes entrepreneur makes with money. And when you start your entrepreneur journey, you sign up for a venture that 80% relies on chance or luck, and you burn the boat and decide to take over the island with your brilliant idea. Definitely is an exhilarating feeling. So, going into the field, starting something new is exciting. But the harsh reality of business is you have a bunch of mistakes you can make. And these mistakes could bankrupt you. These mistakes can lead your business into bankruptcy. You could not grow your business as you want. And number one is undercapitalization. Many business fail early due to undercapitalization or insufficient capital balance. So business owner extremely underestimate the cost of getting their ideas off the ground and driving into a profitable business. If you didn't know, a lot of business aren't profitable when they first start. A lot of business, it takes a lot of money to get them off the ground, and banks just don't lend people money. Um, so what happened is you end up with higher expense costs, and profitability takes longer to reach, and it leads into shorter financial runway. So the solution to this is outline your very detailed business plan and that profile all your business needs and maximize the use of your capital and eventually cash flow. Now you have to strategically plan the plan your highlights and startup costs, operation expense, legal costs, hiring needs, and marketing is all needs to be included with a buffer because you don't know if the market shifts. Item could cost 20% more a month later. So and you only expect to make 30%. Well, if you if the price go up 20%, now you're only making 10%. And if you're in a long-term contract and it's a 5-year contract because you think it's a good idea because you can always find the item for cheap, well, now what? You're making 10% profit. So you don't have a buffer room. You need to make sure you try. Because if you had at least a 40% um, capital gain or 40% profit margin, now if it went up 20%, you will now make 20% profit. So you still have some wiggle room. It's not 30% that you want to make, but hey, it's still wiggle room. You just have to make sure what do you call it, have buffer. And it's a big issue with people. I ran into this issue. I didn't think medical equipment was going to skyrocket in price, drop in price, all in like a month or two. So I ran into this personal issue. And then number two is overly optimistic financial forecasts. I don't know how many times I've went into business meetings and talked to clients and they forecasting their expected profit. And their numbers is ridiculous. I go into a clinic and they're like, I expect to have, 200 patient coming in this month. And I ask them, how many patient came in last month? And they'll be telling me 50 patient. And I asked them, how did you get the numbers to get, you know, 200 patients this following month? Now, these numbers are arbitrary because I can't leak my customers' information, but they said I got it from an ad company. Ad company said this is what they expect. Well, the ad company led them in the wrong way because they overpaid for the ad company, and the ad company underdeliver because they didn't look at the population in that area where the clinic was set up. So they're over optimistic and they overpaid for um, advertisement to get people to come into their clinic. Now, number 3, mixing business with your personal finance. It's very tempting to mix your business and personal finance. It makes you feel great. You have more money in account, but once you hit economic disaster, now it gets complicated. Your accounts, your tax obligation. Now you're putting your personal finance at risk with your business finance. So it's always best to keep it separate. I keep all my business and personal accounts separate just because if someone tries to sue you, they can't go after your personal because they're suing a business, not you personally. That's why you kind of want to do that. Now, talk to a lawyer and count on what state you're in before you make that assumption, but it's always good to talk to a lawyer about this stuff. Now, number 4 is overspending on a startup cost. You don't know how many people I talk to, they want to start, for example, a snow cone business, and they want to jump right into a snow cone truck. And I tell them every single time, have you made a snow cone before? And he told me no. Well, let me get this straight. You want to start a snow cone business, don't know nothing about the industry, but you want to buy a $20,000 food truck to start a snow cone stand without even knowing how to make a snow cone. And I recommended him at the time, hey, why don't you start a small one? Like, you rent out the equipment and get your syrup in order. Because even if you start a snow cone stand, it can be 100 degrees outside, you might not get any customers because you don't have anything in your name. You don't have the social media. You don't have anything built up. So you always try to start with the smallest amount possible. And I recommended him, hey, you got a snow cone stand. Instead of doing a snow cone stand, why don't you do a birthday party and small events to get your flavors properly, and then start a small little stand first, where the cost isn't 20 grand, the cost is like 500, and you can figure this out and look for locations and ask people to host in these events. Now, even if you had to go to a high school and go out over there, make snow cones and test out the water, that's still a different situation than getting a food truck and then trying to do everything from scratch. And the cost is just ridiculous. You're going to put 20, 30, 40,000 into a truck and you have to run it all the time. You don't know if you're going to be profitable because don't know what you're doing. Now, what's going to happen is they overspent on the startup costs. Instead of just getting a snow cone or ice shaver and going to a high school, going to, a baseball game or something like that, trying out, asking people, hey, can I set up my stand for free and try to make a little bit of money to get the name out there. He wanted to start it with a snow cone stand and drive around Houston and try to sell snow cones. And I told him, you're most likely not going to be successful. It's better if you start small. Now, number 5 is a very big one, neglecting financial matrix. So there's numbers and matrix that is used in business all the time. And that is from hiring your people based off of the matrix and numbers that they can produce, or hiring based off how you feel you want to pay someone or how you feel you want to do something. Because if you base off matrix, then you can give promotion off a matrix. You can help people improve by a matrix system, but since you're an entrepreneur, you can put your own spin on your own matrix. But you build that matrix, and that will help give you financial health in your business, because now you engage with financial professionals and experts that analyze and benchmark your business against the industry. So now you're not below standard, you're not above standard, you're either average, and you can keep your business going without overpaying someone in the market and them not producing, for one, or overpaying on getting items where everyone else is getting it 20-30% cheaper than you. Now, number 6 is building your safety net. Now, just because your startup costs, let's say your startup is $30,000. Now you should have a safety net. If your startup cost is $30,000, you should have $40,000-$50,000. So you have a $20,000 safety net so that you can keep your payroll going. The emergency fund, if something happens, if renovation don't go as well, you need to have a budget and reservation in your account, because you don't ever know what's going to happen. Just like personal life, your business also have to have an emergency fund. Now, number 7 is falling into debt without a plan. So this has happened to a lot of people, where they just keep borrowing money and they don't have a plan to pay it back. They don't have a plan to use the money. They just keep borrowing money, because whenever you become an entrepreneur, people will be drawn to you and they will start offering you money. I have people calling all the time, hey, we can get you a better deal. We can get you, this secured loan. We can get you a unsecured loan. Hey, you can borrow money. But if I borrow money blindly and don't have a set goal for it, then I don't know how I'm going to pay it back, because I don't know what money's coming in, what's coming out. So anytime you borrow money, you need to have a good plan to it. Because if you have a good plan for it, then you can have a good payment plan and idea. I'm not saying borrow money, but some people will have to secure loans to help grow their company. And you have to have a good business plan to do this, because if you don't have a plan and you're expecting I'm gonna make this much and you're just doing a blind estimate, it almost never works out. Number 8 is, this happened to my ex-business partner, ignoring tax obligation. Taxes, they will take the money from you. Don't ignore it, because you have to bring a professional who specializes working with entrepreneurs. Now, I say this is because my tax is so complicated that I have a bookkeeper and a CPA that I have to pay separately, because I can't figure out how to do it. And they have to set up my structure legally so that I can pay the bare minimum amount of taxes I can without losing too much money. Because if I put everything as personal, it puts me in more liability, 1, and 2, I pay way more taxes. It's not me avoiding taxes, it's me trying to mitigate as much tax as I can, because after a certain point, you start paying 65-75% of your income to taxes, and that just keeps lowering your money you get to take home. So you don't want the IRS after you. And IRS will just go to your account and take the money. I know one of my secretary had a friend that had $5,000, $10,000 in her account, and because she was having Etsy sales, and she didn't pay taxes for 4 or 5 years, and all of a sudden they empty out all of her bank account with her name on it. They just empty them out, and they don't ask questions. They don't care who name on it. They will empty them out, and that's a problem people will run into. And the IRS has the authority to do it. Now, number 9 is lack of investment in human capital. Well, what does that mean? You're not hiring people that are skilled or talented. You're hiring based off how you feel and how you like them. Yes, you don't want the wrong person in the company. This is what happened to me, and I invested and tried to train people and give them the benefit of the doubt, and it ended up biting me in the butt. And since it bit me in the butt, I lost tons of money, hundreds of thousands of dollars, hiring the wrong person. They stay for 6 months, they leave, not because of the pay, because they want to move on to someone else because they felt lack of growth, or they felt, hey, I'm working too hard. Hey, I'm doing this. And whenever you go to a bigger corporation, you can get paid more, but most likely get paid less. But you do less in the company because they have more people and they're streamlining it to not rely on one person. Unless you're in a certain engineering field or certain fields that are always undermanned in companies. One of them are developers, and I don't know why they do this, but most time engineers are bare bone in the company, and one engineer probably do like 4 or 5 different things. And then if that one engineer left, guess what? They get a next person, and now everyone has to reinvest in that person, train that person up, and we get farther behind in project. So, and normally they leave because a lack of investment into them. So they pay them the least amount for what they're doing, and they want to go somewhere else where if they can do this much work, they want to get paid that much. Or lack of training, because one of the issues I run into is I want to go to 2 trainings a year. I want to go to 1 training a year. Well, if you do that, some of these training cost $20,000 to send to. Some of them cost 100,000. Some of them cost 10,000 to send to. And these are only like a week or 2 courses. So you have a company of 10 people and you have to send 4 or 5 people a year. That's $50,000, $60,000 a year that you have to put aside to invest in your people. And does everyone do this? No. I sent my people a training. After they get the training, I found out if I don't make them sign a payback clause, they end up leaving the company because once they get the certain qualifications, they get paid more. And that's why people like these qualifications in engineering. So it's very thin line where if you invest too much into someone, they can leave and then your company hurts. You don't invest into them, they leave because you're not investing into your people. And then if you hire wrongly and they don't match up with the team, they leave. So you have to find someone that meets the culture and that is affordable. That's the hard part. It's a very thin line and it's really hard to do. And lastly, number 10, not reinvesting in your business. You don't know how many times people take everything they earn from their business, put it into their personal account, start buying Lamborghinis, Ferraris, and all this other stuff, and not investing in themselves. And short term, these temptation will, they bring them a little happiness, but long term, their business suffer. And those are the 10 things that you need to try to avoid when you're entrepreneur. So subscribe, like, and see y'all next time.